Daniel Yergin is chairman and founder of IHA's Cambridge Energy Research Associates, joins me in the studio now. So what are you looking at very closely right now? What is the single biggest driving factor in the fundamentals of supply and demand of oil?
I think there are two big things that are going on. One is the continuing story of China. China is the only country that gets two chapters in the Quest, and because of its importance and the way it's really entered this new higher level of oil prices. The other big thing is this new map of oil production that we're seeing in the Americas, stretching from Brazil through the United States through Canada, which is going to change the balance and mean that the Middle East will look more and more to those growth markets in Asia.
Why is China the only country that gets two chapters in this quest?
Because it's such a dynamic factor. It's growing so fast. Last year, 17 million new cars sold in China, 11 million in the United States. China now consumes more energy than the United States. And people don't really understand where the Chinese energy system came from, what their motivations are, that this is really about maintaining the economic growth in the country and how central it is. So what you see them doing in oil, in natural gas, in coal, renewables, all goes back to jobs for 20 million people who are moving from the countryside to the city every year.
And of course, you have spoken about this new map of world oil production. Mr. Yergin, you said that we will see something very different by 2020, upon which you've said that we will see flows shifting dramatically between hemispheres. And just to break that down a little bit, an example of this is the fact that you say Brazil will supplant Venezuela as Latin America's leading oil producer by 2020.
Yeah, Brazil in the 1970s went into the ethanol business because it never had oil and would never have oil. Now it looks like it could be producing by 2020 twice as much oil as Venezuela, making it the powerhouse of Latin America, and indeed producing more than half of what Saudi Arabia currently does. That's a big change.
And I mean, just with the collapse of this deal, BP failing to sell this asset, I mean, part of this is down to legal problems, regulatory problems, but it comes less than 2 weeks after Argentina's President Cristina Kirchner ordered energy and mining companies to repatriate export revenue to stop capital outflows from Argentina. So she wants more of that revenue kept at home. I'm just wondering, what sort of challenges does that throw up for energy companies functioning in Latin America?
Well, certainly it is a question of nationalism, and that affects the level of investment, everything. And Argentina is a very personalist regime, very nationalistic. It's living off this commodity boom. It's other economy. You know, they don't publish their inflation numbers, correct inflation numbers or anything. So it's a tricky environment for anybody to operate. On the other hand, it is a country with resources.
But if they make it difficult for companies to operate, will that limit, say, the importance of a lot of these countries in Latin America when it comes to the oil market going forward, if we see this increasing intervention in the private sector?
I think Argentina opened up, it's really closed down, taken control of it. So that it means that it's not a place where people want to operate. The big focus is, of course, Brazil, which has entered this rank of the BRICS and is at a different level and scale. And of course, over the last 10 years or so, 12 years, has moved to a more open course, but it's going to need an awful lot of investment to develop those resources.
And one of the other factors that oil traders are focusing on very closely, an IAEA report coming out this week on Iran's nuclear program. Just how inflammatory could that be in stirring up Middle Eastern tensions?
Well, I think that we already have this higher uncertainty because the Arab Spring has upended part of the strategic balance that was part of the stability in the region. And Iran moved off stage in a way. It's now going to be back on stage. And every country in the region thinks that Iran is after a nuclear weapon. And at the very least, it would stimulate a nuclear arms race. So it will heighten tensions. And that's the part of the world that has 60% of conventional world oil reserves.
So then just how much of a geopolitical risk is Iran right now to the oil market?
I think we would say not right now, although there's a kind of proxy Cold War between Saudi Arabia in a number of countries, and particularly when the U.S. pulls out of Iraq, it's a new game, and Iran is standing there. But I think that tension is going to ratchet up.
Will that be offset by the reopening of the Libyan oil market, I should say, that coming back online? They're not at full capacity yet, but they'll be getting there in a few months.
Well, they'll be getting there. Of course, we don't exactly know what the government's going to be in Libya, But I think Libya will come back, but Libya is not at the same level as a producer of the Persian Gulf. It's a kind of mid-level producer.
So can I just a final question, a quick final question. Do you see the Middle East as being central to supply and demand fundamentals going forward, or will they be superseded by Latin America?
No, they're going to be central. They're going to be, but it's going to be to the east. But it really means the Western Hemisphere will be importing less oil from the east, and there'll be more of a north-south flow.